Hello and welcome to Market in a Minute, October the 27th, 2025. So, KSE-100 index remains on the back foot as lower October highs and a 20-day exponential moving average breakdown shift near-term control to sellers. This is not a time to be ambitious. This is a time to be cautious, very cautious. Let's take a closer look. So this is where we stand right now. Another 1140 point drop for the day. Now the important thing to notice is that even though the index is now dropped below two important exponential moving averages over here, the 10 and 20-day EMAs, it is still above the 50-day EMA. Now in technical analysis, a setup like this where the moving average stack is still structurally bullish, which means over here that the 10-day EMA is above the 20-day and the 20-day is above the 50-day, and the index is dropped below 2, in technical analysis, it is still called a corrective drift within an intact primary uptrend. But now, scratching below the surface, you see that the RSI has now fallen below 50 sub-neutral levels, which means loss of upside impulse. MACD is still following. The bearish cross is deepening. The histogram is deepening, which shows further loss of downside momentum. The downside deceleration is increasing. ADX measuring trend is now hovering around 30. This has come down from levels of above 60. So the trend has pretty much run out of steam. Perhaps the one saving grace in this situation is that the pullback has come on very, very thin volumes. And in technical analysis, a pullback on thin volumes can still be making a way for another upside. Now the main question is whether the market will regain volume and enough buying pressure to move above this October high and regain the upside, or it will continue to fall and moving below this support level from October the 13th, 154941. If it breaks below this, it will not just be a break of structure, it will be a change of character, turning the primary trend from bearish now to sideways, then to bullish. So this is a very critical, fragile juncture of the market. The best thing to do, and our verdict for the day, is stay cautious. The primary trend is still intact because the index is still technically above the 50-day EMA, but the sub-trend is weak, where the price is under the 10 and 20-day EMA band and momentum gauges are now turning increasingly bearish. So stay tuned and see if the market runs towards this EMA or this high. Let's watch.